Australia's Vanishing Millionaires. Let's have a look. Hello everyone, Florian Heise here. Welcome to another episode of Heise Says. I'm working through my morning stein of coffee, and I thought we'd have a look at this article written by James Hall from news.com.au. Now, it's to do with the vanishing Australian millionaires. We have lost more than every other country, apparently. Now, before we jump into this, I'd like to remind everyone and read through the definition of the wealth effect. And this is from one of my other favorite websites, Investopia. And this is an explanation of the wealth effect. And we need to keep this in mind because I think this vanishing number of millionaires, this decline in property value, is going to have a flow-on effect more than people realize. So what is the wealth effect? The wealth effect is a behavioral economic theory suggesting that people spend more as the value of their assets rise. The idea is that consumers feel more financially secure and confident about their wealth when their homes or investment portfolios increase in value. They're made to feel richer, even if their income and fixed costs are the same as before. What do you think, guys? Has this affected you? And can non-Austrian economists even understand the concept of behavioral economic theory? That's a jive. So, the key takeaways. The wealth effect posits that consumers feel more financially secure and confident about their wealth when their homes or investment portfolios increase in value. They're made to feel richer, even if their income and fixed assets are the same as before. Critics argue that increased spending leads to asset appreciation, not the other way around, and that only higher home values can be potentially linked to higher spending. I would say higher home values has more of an effect than anything else. So here's wealth, spending. So if your wealth goes up 0.1%, your spending goes up 0.05%. How the wealth effect works. The wealth effect reflects the psychological effect that rising asset values, such as those that occur during a bull market, have on consumer spending behavior. The concept hones in on how the feelings of security, referred to as consumer confidence, are strengthened by sizable increases in the value of investment portfolios. Extra confidence contributes to higher levels of spending and lower levels of savings. So I'm just going to bring up, happen to have this chart here, which is showing the consumer sentiment index and where it is heading. What do you reckon, guys? It's obviously heading down quite sharply. So this theory can also be applied to businesses. Companies tend to increase their hiring levels and CapEx, capital expenditure, in response to rising asset values, in a similar fashion to that observed on the consumer side. Well, let's just bring over here. I've got this other screen up. We can see here consumer, Australian business confidence, and it's gone down from 1 down to 0. We'll go to the 5-year level. You can see here, that's I'd say a drastic decline. That's comparable to the consumer confidence. So, what this means is economic growth should strengthen during bull markets and erode in bear markets. Special consideration. At first glance, the notion that the wealth effect spurs personal consumption makes sense. It is reasonable to assume that anyone sitting on huge gains from a house or stock portfolio would be more inclined to splash out on an expensive holiday, new car or other discretionary items, or white goods like our treasurer is hoping the housing neo-bubble they're saying will encourage. Nevertheless, critics claim that increasing asset wealth should have a much smaller impact on consumer spending than other factors, such as tax, household expenses, and employment trends. Why? Because a gain in the value of an investor's portfolio does not actually equate to high disposable income, unless you draw the money from your house, unless you have a mortgage where you can, redraw facility, or you refinance, or you buy another one. So initially, stock market gains must be considered unrealized. An unrealized gain is a profit that exists on paper, but that has yet to be sold in return for cash. The same applies to rocketing property prices. So, there's some criticism of it, and I'll link to this if you'd like to go through the whole thing, but this gives us an understanding. I'd say the the arguments against it in housing, well, considering how much of investment has happened in housing here in Australia and how many people draw upon that for investment and other purposes, I don't know. I think it's probably, would the wealth effect with regard to housing, do you think it would be higher here in Australia than in other Western countries? Let me know what you think in the comments, guys, or if you've got any information. It'll be interesting. But, so there we go. We've had the wealth effect. We're aware of that. Now we've lost 124,000 millionaires in Australia. Could that be perhaps why there is concern that we are having a retail recession? What do you think? I think I've got a theory. So, no country in the world lost more millionaires this year than Australia, with the average adult felt a large loss to their wallets, or their perceived wealth. Falling house prices and the weaker Australian dollar caused the number of millionaires in the country to tumble, with 124,000 falling below the global mark in US dollar terms. Wealth per adult slid from US 411,000 to 386,000, meaning the average Aussie lost $36,000 over the year, according to Credit Suisse 2019 Global Wealth Report. No country in the world lost as much as Australia, which fell from being second in the global rankings in 2018 to fourth in 2019. Average wealth per adult in the nation was only marginally better than the 2011 figure of 384,000. So there you go. We've slid all the way back. So the gains in the last 7 years have been completely eroded. Well, let's just have a look. We'll bring up another chart here. And this is just showing you the investment into real estate and the percentage share of new building approvals from foreign investment. So we're back now down to this level, with this level of foreign investment here. And I'm going to bring up this quote here from Matt Berry, and if you haven't read it, read his thing on House of Cards. It's on LinkedIn, you'll find it on Medium. But 2016, 67% of Australia's GDP growth came from Sydney and Melbourne, and the apartment frenzy from Macquarie Park to Sydney CBD accounted for 24% of all of the country's GDP growth. So nearly a quarter in apartments. So this is where our wealth is going. This is where all the money, wealth, prosperity of the nation went, and it was into these apartments. And now they are, frankly, a lot of them are falling apart. We're having a multitude of issues coming out. Every day it seems to be a different thing. It's getting to the point where my hair is falling out, guys. That's how bad it is. So Credit Suisse defines wealth in the annual rankings as the value of financial and real assets by households in relation to debt. Median wealth in Australia in 2018 was the highest in the world at $191,453. It was overtaken by Switzerland after falling to 181 in 2019. Up until the May federal election, the national housing market had lost billions of dollars in value over an 18-month period, which Credit Suisse attributed to the declining wealth of average Aussies. 3 rate cuts from the Reserve Bank of Australia also weighed on the currency, which has steadily depreciated over the year. Well, yes it has. Yes it has. We'll jump over here to, let's look at what the Australian dollar is sitting at right at this moment. Trading economics. Aussie US dollar is at 68.7. But, so there you go. Well, it's climbed up, going good. Probably optimism from, I imagine, we've got historic data. There you go. Optimism from the potential for a trade deal with China and US. But you can see here, let's have a look at 10 years. I mean, there you go, guys. Purchasing power on a global level from 2012 is significantly decreased. So a change in the number of millionaires by country. So United States, Australia negative 124, US growing, Japan growing, Canada growing, Germany growing, Brazil, Netherlands, Switzerland, Greece down, France down, Hong Kong down, Saudi Arabia down, Italy down, Turkey down, United Kingdom. Boy, Australia's got such good companies, all such fantastic economies. The report reveals how skewed Aussie wealth is to real estate. Exactly. And how the fluctuating property prices impact consumer confidence and economic activity. That's the fundamental problem, guys. We haven't really invested much. I mean, I'm going to bring up the Observatory of Economic Complexity. Oh, actually, sorry, I will do a cube zoom to it so you can see the link. But you can see just what we're exporting and just the complexity of our economy. Investing money into apartments or real estate isn't that advanced. Okay, it only has value as long as there's population growth and demand in that nation. If there's no demand for it, if there's no unemployment there, if there's no jobs, why are people moving there? Just because it looks pretty. Taxes aren't good in this country. So, non-financial assets such as property accounted for 58% of total household wealth, compared to 45% in Switzerland, 39% in Japan, and 35% in the US. That's really high, nearly 60%. The high level of real assets reflects a large endowment of land and natural resources relative to the population, but also high property prices in the largest cities, the report says. So, resilient wealth outlook in Australia. The report noted Australia's high average wealth, combined with its relatively low wealth inequality. Only 7% of Aussies had a net worth below 10,000 US, compared to 17% in the UK and 27% in the US. Wow, that's crazy. But then again, you're hearing more and more about people in the US struggling to eat. The proportion of those with wealth above US 100,000 at 66% is one of the highest in any country, and about 6 times the world average, the report says. Yes, but if that is just in property, and we're in a bubble and it's artificially high, what does that tell you? With 1.3 million people in the top 1% of the global wealth holders, Australia accounts for 2.6% of this top slice, although it is home to just 0.4% of the world's adult population. Well, there you go. There you go. So, an interesting take on the situation. I think it will definitely have a flow-on effect to retail spending. And remember, retail employs about 9% of the workforce, or 10% of the workforce in this country. More and more people are saying that, property prices are going to surge. The boom is back. The boom is back. I can't see it. I can't see it. I get the feeling people are trying to encourage a continuation or more excitement or more positivity so more people get involved in the sector, because it will flow on to the rest of the economy. Anyway, guys, let me know your take on this. Please like, share, and subscribe. If you'd like to help support the channel and help me make more content like this, I have a Patreon and Subscribe Star if you want to financially support. I have referral links you can use. It all adds up, and I really appreciate it. And welcome to my newest Patreon supporter. Thank you very much. Appreciate all the help. Guys, take care, and I will talk to you later today once I find my outro. See you later.